Well, with the markets responding to a whole host of triggers from the Russia-Ukraine crisis, Fed's taper view, now earnings, how smartly can you adopt a balanced portfolio approach and earn decent returns? Let's take some of those questions. If you've sent them in, it will be on this number on your screen, and we will take a few every week on TV and online. Let's begin with some of those viewer queries now. Our first question today is from BVM Sarma in Chennai, and this is on Thyroid Care.
Good evening, Udayan. This is BVM Sharma from Chennai. You are one of my favorite analysts. I have purchased 3,500 shares of Thyroid Care during the taking over by Pharmacy, thinking that the Pharmacy has come into picture and operating performance of the company will get improved. The project, the share is going down day by day. I really don't know what to do. Can you kindly advise?
Well, it's not just Thyroid Care, but almost all diagnostic companies, even Dr. Dalal's Path Labs has had a terrible run in the market. I mean, they've corrected anywhere between 25 to 35%. I think part of this nervousness is because of the kind of aggression that we are seeing from many of the hospital chains and online players, online diagnostic players. So there is a general feeling among investors that margins for most diagnostic companies will be under severe strain over the next few months and years. And that's why they've started underperforming. But I think you're right in pointing out that the Pharmacy acquisition of Thyroid Care could be an interesting turning point. Because as you would know that Thyroid Care is essentially a low-cost diagnostic product and has been operating and fairly successfully in the B2B space. I mean, they provide diagnostic services to hospital chains and nursing homes. But now with Pharmacy's acquisition, or the acquisition by Pharmacy, they're trying to move from the B2B to the B2C space, where presumably margins would be quite a bit higher. So we'll see. It's a product in transition, and we'll see the next few quarters on how easily Pharmacy is about to bring about that B2C transition for Thyroid Care. It's a well-managed enough diagnostic service. So having seen such a big price erosion, I think it might be a little late to sell that company. You're probably better off trying to wait it out and see whether Pharmacy can actually take Thyroid Care higher over the next couple of years. So I would not panic at this stage after such a price erosion. Maybe patience is what you need to adopt with that company.
Jagannath Pawari of Bangalore has a question on Natco Pharma. So sticking with the healthcare space, let's listen in.
Greetings for the day. Myself, Jagannath Pawari. I am basically a mechanical engineer. I am from Bangalore. My query is regarding, I bought Natco Pharma share around 920 rupees. Currently, it is trading near to 820 to 830. My query is whether shall I hold Natco Pharma in the coming days, or shall I sell it off? I request you to kindly suggest on this subject. Thank you for your support. Thank you for your valuable suggestion. Have a good day. Thank you very much.
Well, Natco Pharma has been stuck in a range this year of between 800 and 900, around the price that you've acquired those shares. And that's because the stock does not have any great near-term triggers. The important trigger was, of course, the launch of Revlimid in the US, which is a big drug, $8-9 billion drug. And a lot of Natco Pharma stock performance actually hinges on how Revlimid does in the US. What kind of price erosion will we see post the launch of the generic version by Natco? And what kind of market share Natco Pharma will get in the Revlimid space in the US. So I think a fair part of the share price of Natco is hinging on the Revlimid performance. And the market will now wait to see how over the next 3 to 6 months Revlimid performs in the US. And on that will be determined how the Natco Pharma share does, which is why you're seeing this consolidation in the 100 rupee price band. And I think in the near term, you'll probably have to see more consolidation in Natco Pharma. So don't expect this stock to be a rocket. It is cheap enough after the correction. At 800 odd rupees, I think it's trading at no more than 15 PE. And you won't find too many high quality pharma stocks in the market at 14, 15 PE. But the problem is that A, there is the Revlimid uncertainty on how it will do, and B, the existing portfolio of products, whether it's oncology or agrochemicals, they are facing some headwinds for Natco. But therefore, growth will not be very strong. If you strip it ex Revlimid, then the core business growth will probably be not very strong over the next 2 to 3 quarters. So my best guess is that the stock will continue to be in a range unless there are positive surprise from the US on the Revlimid front. Then it could be a massive trigger for the stock. So I think you will have to be patient. Don't expect any great returns in 2022 from Natco Pharma. That would be my best guess.
Okay, Nishat has a query. This is Nishat from Hyderabad on Sigachi and taking stock of whether or not she should remain invested in that stock.
Hello Udayan, this is Nishat from Hyderabad. I have 30 stocks of Sigachi stock at 340 rupees. Can I hold the stock for the next 3 months? Should I average or exit the position?
A 3-month call on Sigachi or any stock is very difficult and beyond my powers, surely. But the problem with Sigachi is that it listed too high. It listed at many times the IPO price, and therefore it needed a lot of time. It needs a lot of time to digest those initial gains. So it's no surprise that the stock has corrected from 600 odd to 300 odd levels. It is just purely a function of how much it had gone up post the listing. It's a good company. It makes, as you know, cellulose-based products which are in use in pharmaceuticals, in F&B, and all these kind of cosmetics, these kind of user industries. So the space is good. It has a very good list of clients locally and in the international market particularly. It's a fast-growing company. So I don't see any major problems with Sigachi. Part of the rub-off has been from pharmaceutical stocks in general, because pharma as a space has corrected in the market quite a bit, and maybe that has had some fallout attendant with very high valuations, starting valuations for Sigachi. But as I said, it's a good enough company, and once they get over some of the raw material pressures that they're witnessing right now, I think the stock might eventually begin performing. The good thing is that your entry price is not at the highs of 600, where a lot of people bought it and have got stuck in that company. You bought closer to 300. So I would say that it's a stock that you probably want to be patient in. This is not a recommendation to buy any more of the stock or anything like that. But I think it's a reasonably good company, and the recent price performance says more about how much it had gone up post IPO rather than anything to do with its recent performance.
Tanveer Mistry is written in from Mumbai on IHCL, and a couple of questions there post some of the recent announcements.
Hello, this is Tanveer Mistry from Mumbai. Any particular reason why Indian hotel stock is showing 6% increase? Is it a good time to sell or hold?
No, I think Indian Hotels actually has reasons for going up, because it turned, as you would have seen, the previous quarter was a profitable quarter after, 5 or 6 quarters of being in losses. So I think it's a sign that it's coming out of the post-COVID slump, because business has started picking up. The leisure business for Indian Hotels is doing quite well already. You can see distinct signs of recovery in the leisure segment. Average room rates are picking up, occupancies are picking up across properties, and that has of course rubbed off to better margins in the recent quarter. But I think the business segment will also start to fire very soon, and you will see inbound travelers, which is very key for Indian Hotels, also start to open up as COVID restrictions start to get eased by most international airports. I think a combination of business travel and inbound travel will see better results for Indian Hotels and add to the fillip that they're seeing on the leisure segment already. So it probably is a good play in the near term on a recovery. Over a very long time, I'm not a big fan of hotel stocks because they don't exhibit great return on equity. Very few of them do. They're quite asset heavy. So return ratios being very poor, they usually don't create a lot of wealth in the long run. But in the short to medium term, I think there is a possibility that some of these hotel companies will do well. But if you get a very good bump up in the next year or two, maybe you would want to reevaluate your position, given that the long-term metrics usually aren't great in this sector.
All right, Udayan, thanks for taking the time out to answer all those queries. And if you have a query you'd like to send in, just simply message us on the number on your screen, and we'll take a few of those every week with Udayan.
If you like the video, do like, comment, share and subscribe.